Hey guys, coming back at you with another daily update video. It is Thursday, June 25th. The market just closed 10 minutes ago. It's 4:10 p.m. And taking a look at the overall sector map, we can see a lot of green on the board. So we had a decent rally today. Tech rallied about 1%, give or take a little bit. Financials were up, insurance, banks. Semiconductors were a mixed bag. AMD was down about 1%. Micron was up about 2%. Intel also down 1%, Nvidia up almost 3%. So overall, the market was green. Scatter stocks here and there, depending on what you were playing. You may have been red or in the green, or maybe even sideways. So rather individualized in terms of what you had. You know, my kind of four stocks I've been looking at this week. AMD was in the red, Micron was in the green. We'll take a look at IWM and Disney as well, just for posterity. But if you want to take a look at AMD today, so AMD opened up pretty much sideways. I mean, it opened the market up about 0.5%, about 30 cents where it closed yesterday, and then within the first 20 minutes dropped down to almost minus 3.5%, then rallied back up slowly as the day went on. So that was kind of the theme for the market in general. But as you know, I don't have any current open positions on AMD or any other stocks this week. I want it to be all cash just because this market's been up and down. I think it's trying to figure out what it wants to do. And today there were kind of two big issues of news that were going to come out, and so I wasn't sure how the market was going to react today specifically. And that was because it's Thursday. That means the weekly unemployment numbers were going to come out, which again, could send the market up or down depending on how people take that. And then also today, the bank's stress test results are going to come out. So I don't believe they've come out as of yet, but we'll have to see how the market reacts overnight and how good those results are. If they're bad, we might have another red day tomorrow. If they're not that bad or actually good, or I should say better than expected, then maybe we'll have another small rally or a green day tomorrow going into the weekend. But we'll have to see. As I said again, I don't think those stress results are out yet. I don't think they've been made public, so we'll have to see after hours if there's any big movement up or down either way. So let's just take a quick look at the graphs here. So here's AMD. So AMD, it's not been looking so good the past few days. It was around $55 on June 23rd, so just earlier in this week. And now it's all the way down to $51. We had a little bit of a rally today if we zoom in, and we closed it at around just under $52. So again, looking at the RSI curve, looks like we're in the oversold category. However, the DMI is showing a significant bearish trend. So again, technical analysis, take it for what you will. But I did actually look at if I wanted to open up some puts on AMD, not for tomorrow, because the premiums for the puts on tomorrow were pretty bad. I mean, that's expected because it's only 1 day to expiration essentially. But I was looking at actually opening up a put for the following Friday. And if I were to open it today, because there's a longer day to expiration as opposed to opening it up on Monday like I usually do, the premiums are going to be a little bit better. And I will say it was tempting because I could get in at around $48 or so. Let's just check that math. So $32 in premium divided by $4,800 in risk. That's actually almost 0.7. So I could probably get in at 47. Let's just take a quick look. 22 divided by 4,700. So yeah, I could get in at the $47 strike price, which is actually pretty good for AMD if you get a sign at that price, as long as we're not in a continued downturn. So let's see how the market does tomorrow. I saw in the morning the market was very choppy today, but then it just kind of traded sideways for the rest of the day. It was pretty calm. So if it's a similar scenario tomorrow, then maybe I will try and get into a put at like 47, collect a little bit of premium and ride it out, because at 47 I think AMD has some room or some cushion there, because looking at 47, so 47 is below 2 Fibonacci levels. So it's below this Fibonacci level here at $50, $51, which has been a pretty strong area of resistance for AMD, or I should say support for AMD over the past few weeks. And it would have to bust through this Fibonacci level, which is around $48 and some change. So if you believe in Fibonacci levels, and actually AMD hasn't traded at 47 since early April. So about, over 2 months now. So that might be a good and hopefully secure strike that won't be tested as long as we don't get put into another downturn. But again, if you are still bullish on the market, catching AMD in the low 50s Like I said, AMD seems to like to trade between low and mid 50s. Sometimes if you're lucky, you'll catch it getting into the high 50s. So it's been trading at like 51s for the past 2 days now. So if you're bullish on AMD and the market in general, it might be a good chance or a good opportunity to get into AMD at a low price, whether you just want to buy shares flat out. Maybe I'll buy, you could consider buying 100 shares of AMD at around $51-ish, then start selling covered calls on it if you're bullish on the stock in the market. So that's another play you could do. Let's just take a quick look at Micron, which is another semiconductor stock I kind of been watching lately. So Micron had a good day today. Micron opened sideways and then it rallied, and then during power hour, I mean, look at it. There's something about power hour where as soon as the clock hits 3 o'clock, it just, big movements happen. I mean, it just rallied from 48.34 and ended up closing at 49.20. So, a little less than $1. It just shot up in an hour, which is, it's crazy to think about. But let's take a look at the graph on Micron here. So Micron, you can see it had this pop here today where it was trading at the low 48s, popped up to low 49s. So, we'll see if this is a fluke, and are we going to have another run up on Micron again, or is it going to still want to trade a little bit lower in this Fibonacci zone? But as you can see on Micron, I've said it before, I think Micron likes to trade in the kind of mid to high 40s right now. So it's kind of right up in that upper echelon at about $49. So, if you do want to sell a put, I may try and get in below 46 if I want to, which is below this Fibonacci level. And that also looks like it's a pretty decent level of support for Micron, because it tested that area or came close to it around mid-June and then bounced right off it. So we'll have to take a quick look at Micron. Right now, the premiums on Micron are a little bit better than they are on AMD. But so we just take a quick look. Again, if I were to open a position on Micron, it would be for the following Friday, July 2nd, not for this coming Friday, just because, again, the premiums aren't that great. But if you just look at the premium values on Micron, I could probably get in on Micron at like maybe even the $43 strike. I mean, that's actually looking pretty good right now, because you're going to get a $6 buffer from where it's trading. So let's just see. $30 divided by 4,300 in collateral gives you a 0.7. Wow, I could even get in lower. I could probably get in at like $41 if I just want to do a minimum 0.4% return on my risk. So that's $28 divided by 4,100 in collateral. Let's just see, times 100. That's 0.7%. That seems a little too high. So let's try $12. So $12 in premium divided by $4,000 in collateral. That's a 0.3. So I could probably get 40.5. I think that's probably going to be my that's probably going to be my sweet spot. So $19 divided by $4,050 in collateral for the $40.50 strike price. That would give me, yep, that's my 0.4 right there. So actually that's looking pretty good right now. The premiums on Micron are great, which allow me to do that, but it has a 92% chance of profit, and I could collect almost 0.5% return on my risk and have an almost $9 buffer from where Micron is trading at. Let's just take a look at the graph right now on Micron. I mean, Micron hasn't been at 40 since, actually, Micron was $40 on March 23rd during the big drawdown. So I think for Micron to crash that low in a week would be pretty unusual. It would have to break through this Fibonacci level, and almost get very close to this support level here. So actually, I'm glad I discovered this, because I think that's actually a pretty good opportunity for me to maybe open up a position tomorrow. I'm really liking that option actually right now. I have a decent amount of cushion, still collect a little bit of premium, and that way my cash is not just sitting on the sidelines. And I personally don't think, knock on wood, that Micron is going to drop $9 in a week. So that's actually pretty interesting. I'm gonna have to take a look deeper into that, but that looks like a good play. We'll see what Micron opens up tomorrow morning, and maybe I'll get in on a play on that. So let's take a look at Disney as well. So Disney again traded up and down a little bit, but overall down today. So actually last night / this morning, Disney finally announced that they're going to delay opening their parks, which is, if you watch my previous videos, what I suspected. So I think some of that caused the big downturn today. However, it wasn't as bad as I expected. And I suspect that that's because a lot of the people already assumed that was going to happen, and it was probably priced in on some of the drops earlier in the week. So that's why it wasn't as bad, I think. Because I was expecting that once that news broke, that Disney would get sub 110. And it didn't really like that. It got 109 for a little bit, 109 some change, but then bounced right back up and ended up closing at 111. So we'll have to see. Keep an eye on Disney. But actually right now I'm really liking that Micron play for myself tomorrow. So we'll have to see how that shakes out tomorrow morning. And then lastly, let's take a look at IWM. So IWM had a rally today where it jumped up from around 138 and actually ended up closing at 140. So, you know, maybe this is what they call a kangaroo market, and it's just up and down, and maybe we're not in the beginning of a downturn, despite all the graphs and charts I've shown you in my recent videos about how essentially the apocalypse is coming and we're set for a crash. But you know, we'll have to see. But I am, if I do open a position, it's going to be a small proportion of my account. I'm not going to go all in with my whole portfolio again, just to make sure that if I do get assigned shares, I don't have all of my kind of play money per se, or my trading money locked up. But like I said, if I do get locked up in companies like AMD, Micron, or Disney, I would be okay with that. I would just sell covered calls on the way down. Because I think they're good companies, and I don't think they're going to go bankrupt, and I think they have a good future ahead of them. So I'm assuming that they're going to go back up over time. But let's just take a quick look at what the most popular options were that were traded today. So again, tech stocks, right? Apple, Tesla 1, 2, AMD was 4 today. I believe it was 3rd yesterday. And these airlines, right? These Boeing, American Airlines were always very popularly traded. Disney again is up there. Innovia Farm. This stock has become very popular lately, and I believe it's on, you know, vaccine hype. But I saw a post where somebody, I believe on Reddit yesterday, had bet, and I say bet because it was essentially a gamble, but they put $3 million worth of options into Innovia, and I think since this stock popped, I mean, look at it, it's up 40%. They're up like 1.8 million or something on their contracts, which, you know, good on them. You know, it takes money to make money, I guess, but I don't have the stones to make such a big gamble, nor do I have the capital to risk $3 million on a you know, pharma stock. But you know, it worked out for them, so good on them. I just want people to make money. So however you do it, good for you. But yeah, a lot of the usual suspects right in the top. A lot of tech stocks. There's Snapchat, there's Facebook, Amazon's up there. And a lot of the kind of cheaper stocks like Ford, American Airlines and such, GE. Nike's up there as well. I think Nike had earnings this week, or it's coming up, I believe. So that's why Nike's rather popular recently. But here's Micron here as well. Virgin Galactic as well. You know, they signed a recent contract with NASA, so they've been kind of popping off lately as well. But DraftKings is up there. So, you know, overall, I think good day in the market today. If you look at the total number of percent calls versus puts, looks like more people are in the call section. So I guess they're still bullish on the market. So, you know, I think an overall good day for the market. I think if you had some puts that were expiring tomorrow, hopefully you're out of the money again. You know, it wasn't as big of a move up as it was down the previous day. So maybe you're still pretty close to at the money, or maybe you're not quite out of the money yet. But maybe tomorrow will be another green day, and before the market opens, I hope your puts expire out of the money. Let's just take a quick look at some of these tweets I've seen recently. So here is an interesting tweet that I just saw today. And what this is showing you, it says an 18-month view of a post-COVID world. So what it's showing you is the different kind of aspects of society. And it's saying that COVID-19 will leave lasting impacts on life as we know it. Many of these dramatic changes are already in effect. And it says the World Economic Forum surveyed 347 senior risk analysts on the impending threats most likely contribute to a global fallout, and no area from the economy to the environment is untouched. So the vast majority of them essentially said that the virus is going to lead to a prolonged global recession. And I don't think that's, you know, that far-fetched, and that makes sense that the vast majority, 68.6% of them said that. A lot of the top percentage gainers here are, you know, economy-related things. So the second most is more bankruptcies and consolidation. Next is industries fail to recover, high unemployment, and then we're going to skip this one for now, but it says weakening major economies, prolonged supply chain disruption, emerging market collapse. So 1, 2, 3, 4, 5, 6, 7. So 7 out of the 8 top, effects are all economy related. This yellow one here, or orange one, says more restricted travel and trade movement, which again makes sense, right? People are not flying, people are not going on vacations, on cruises. So more restricted travel makes sense. And you can see it's color coded based on kind of sector. So blue is economic, purple is societal, orange is geopolitical, this teal color is tech, green is environmental. So the least likely, they believe, is worsened long-term military conflicts. So I guess it's a good thing that they predict that we're not going to have a lot of wars. I guess because we're going to have other issues going on in the world. But yeah, I mean the top go-getters here are economic issues, which makes sense. So here's another chart I saw. So this is the total number of daily cases of the virus, and we just hit an all-time high. So today on 6/24, we hit 38,672 cases today alone, which is the highest number that we've ever had. The next highest was 36,000, and that was all the way on April 25th. So again, you can see, and I showed you a similar graph yesterday where we had the rise up, then we kind of slowly, got it under control. But now, around June 18th or so, the number of cases is going back up, and that's probably due to a combination of the rioting and people, gathering in that restaurants and things are slowly opening up and states are opening up. So, I mean, it makes sense that cases are rising, but it's unfortunate that as of today, it's worse than it has ever been. So just stay safe out there, keep everyone else safe, and we'll all get through this together. But here's another graph. So this is showing you the unemployment claims over the past few months. And you can see that it was pretty stable pre-pandemic. The pandemic took off, so the unemployment numbers took off. We had a small decrease in numbers, which is great. We're slowly, very slowly decreasing the number of unemployment. But you can see compared to where we were pre-pandemic, it's still very high. So these are in thousands, right? So we can still see that a large number of the population is still unemployed, unfortunately, which obviously is not good for the economy. Here's a graph showing the number of hospitalizations versus ICU capacity by state. So for example, Arizona's been in the news lately. So right now Arizona is showing that 34% of their ICU beds are filled with COVID positive patients. And that's actually the highest in the country right now, 34%. If we want to take a look at some of the lowest countries, there's a few with 2%. So states like Alaska, Hawaii, Idaho, Kansas. So it looks like a lot of the more remote states. So Montana only has 1%, North Dakota 2%, West Virginia also 1%, Wyoming 2%. And then the last column here shows total ICU occupancy rate. So Arizona, again, has the highest occupancy, or actually second highest, I should say, with 84% of their ICU beds being filled. Missouri actually has the highest occupancy with 85%. However, if you look at the column next to it, the majority of those patients are not COVID positive. Only 3% of those beds are in COVID positive patients. So looks like the population in Missouri, they're just sick for other reasons. But it's an interesting graph if you want to look up your own state to see how you're doing. We just take a look at New Jersey here. New Jersey, 19% of their ICU beds are with COVID positive patients, which is not great. And unfortunately, they don't have data captured on their total ICU bed occupancy rate. But you can also see the number of total ICU beds. So New Jersey has 1,658 total ICU beds. Let's just see which state has the. California has what looks like the most ICU beds at 8,498. Texas has second most with 8,234. And that's another state that's been hit hard. 15% of their ICU beds are filled with COVID positive patients. So again, just stay safe out there, and we'll get through this together. Lastly, here's a graph I saw that shows the share of personal income that's derived from government benefits. So basically, what percent of the population is, or I should say, what percent of your income is basically from government handouts or from essentially being paid by the government. So you can see this year, as of April 30th, it's 30.4%, which is the highest it's ever been by a long shot in the past 20 years. I mean, the highest before that was maybe like 17, 18, and we're almost double it. So again, this goes hand in hand with the fact that a lot of people are unemployed. The economy is shut down. People just aren't making money because they don't have a job, or they're not being able to run their business. And, you know, the economy just is not looking very good. So stay tuned. I actually recorded a video today about how I think the stock market bubble is going to pop, and I based it on a video and some facts that I've seen on the internet. So I'm going to produce and release that video on Saturday. I think it's a very good video in terms of just kind of the information that I was able to find and kind of relay back to you. So stay tuned for that. If you have any questions or comments, as always, leave them below. And as always, happy trading.